please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast in the Mumbai News Centre. I am Anisha Jain and feeling with me the Monday morning blues is Nigel D'Souza. Well, Nigel, good morning. Last week it was about record highs, it was about bank recapitalization. This week it's all about earnings and it looks like we have positive cues both globally, Asia as well as India won yesterday, New Zealand, that breathtaking match. So everything looking good as of now.
Absolutely, Anisha. You have summed it up perfectly. The only problem I think is crude prices. That's gone above that $60. And in Europe, the Catalonian crisis deepens. Catalan parliament declares independence from Spain. Madrid sacks the Catalan government after independence move and calls for elections on December 21st as thousands march in Barcelona for a unified Spain.
Back home, CNBC TV18 learns that the group of ministers on GST recommend a single rate of 1% for composition scheme, manufacturing to be cut down from 2% to 1%, and for restaurants to be cut from 5% to 1%. That's an exclusive.
And ICICI Bank reports the lowest slippages in 8 quarters and domestic loan growth improves in the second quarter. But the overhang of the RBI divergence remains. ONGC, on the other hand, they report a good quarter. Profitability jumps up more than 30%. EBITDA margins as well expand, coming in at around 48%.
In big earnings to watch today, steady quarter expected from HDFC, higher volumes to lead Tata Steel's second quarter earnings, while Lupin is expected to post subdued Q2 numbers today.
And Ricoh India will be in focus today on news that the parent Ricoh Global, which holds more than 73% in the Indian company, they'll now cut off all financial support in the future. Well, Asian markets, they have opened up with a positive bias early this morning. The Nikkei is sitting with a gain of close to around 0.2%. Remember, we had retail sales numbers coming in over there. That increased by around 2.2%, a tad bit below what the street was estimating of around 2.5%. However, in terms of the Japanese market, all eyes are going to be on the Bank of Japan meeting. That kickstarts today. So that's going to be the important cue that we'll be watching out in the next couple of trading sessions. But the other couple of markets as well that had opened up, the Kospi, the first tick was in the green, so that should be up for you in the screen. It's still holding with a gain of close to around 0.4%. And let's pull up the remainder of those Asian markets. Let's see what they're doing early this morning. Well, it's more positive than negative. In fact, the Taiwanese index is now up more than 1%. What does this mean for the SGX Nifty? Remember, in Friday's trading session, we did see some profit booking. It's likely that we could make all of that off, in fact, in the first tick itself, because what the SGX Nifty is telling us, that we could see an uptick of close to around 35 points.
Okay, so more positives than negatives on the Asian markets, and on Wall Street as well. The S&P 500 and Nasdaq Composite closed at record high on Friday, now boosted by large gains in technology shares following better than expected quarterly results from heavyweights like Amazon, Microsoft, Alphabet and Intel Corp. The index rose around 2.2%, notching its biggest one-day gain since November 2016. On the economic data front as well, the US economy expanded at a solid 3% annual pace for a second straight quarter despite damages from the 2 hurricanes. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
It's a new week on Wall Street, and the Nasdaq and the S&P 500 both begin the trading day at fresh all-time highs after blowout tech earnings last week. Shares of Amazon, Microsoft, and Alphabet, the parent of Google, are all now at fresh record highs, and Amazon founder Jeff Bezos is the world's richest man, worth $90 billion. This will be another busy week for earnings, but it starts off pretty quietly today with HSBC Bank and Nintendo, the big names before the bell, and Oreo maker Mondelez and Samsung Electronics after the close. In economic data, we get reports on personal incomes and spending in September, as well as a read on manufacturing in Texas from the Dallas Federal Reserve Bank. Meantime, this week, President Trump will announce his nominee to become chair of the Fed. Janet Yellen's 4-year term expires in February. And it's not too late to get what you need. Halloween is tomorrow. and Americans are forecast to spend more than $9 billion this year on candy, costumes, decoration, parties, and yes, haunted houses, and a lot more. I'm Hampton Pearson, CNBC Business News, Washington.
All right, then. Ahead of Halloween, I think yesterday, Anisha, in the last few years, I saw so many people dressed up. I've not seen that really in Mumbai, but yesterday there were quite a few in the evening as well. So even Mumbai is, I think, keeping up with
the global trend.
Yeah, absolutely. But let's move on then. Markets have been for days, in fact, keeping an eye on news about the next Federal Reserve chair. Remember, President Donald Trump reportedly favors nominating Federal Reserve Governor Jerome Powell, while when current chair Janet Yellen's term comes to an end next February. Trump is expected to reveal his decision later this week. Okay, then let's get in some expert opinion on what they make of the Fed nominee and its impact that it could have on the markets.
I think Jay Powell, in terms of monetary policy, is probably a continuation of the Janet Yellen policies, at least for a while, until he sort of gets his sea legs in the chair. He's probably a little more conservative than Yellen is, but it's not a gigantic difference. The bigger difference would probably be on regulatory matters.
We're now looking at a 2018 where we're going to have the big central banks heading in separate directions, and we want to know how big that gap is. We've got Kuroda in Japan signaling he's going to stick with super quantitative easing for years. And in Europe, we've got the ECB indicating the same. So what we've got to watch for is how this pick by Trump affects both equity markets and, of course, currency markets, because it could send the US dollar on a tear up.
Well, no worries from the European markets. In Friday's trading session, most of them ended higher. In fact, the French CAC, that ended touched its highest levels that we have seen in close to a decade. The German DAX as well set record highs after dovish comments came in from ECB President Mario Draghi. Remember, we saw a sharp uptick in auto stocks. That as well boosted the DAX. So in terms of the three frontliners, all of them ended in the green. In terms of a soap point, if you're looking out for some red, then the Spanish IBEX, that in fact was down in Friday's trading session. It ended with a cut of close to around 1.5%. This is after news emerged that the regional parliament of Catalonia had declared independence from Spain. And let's stick with that topic itself. The Catalan Parliament on Friday voted to declare independence from Spain. The Spanish Senate immediately voted to enact Article 155 of the Constitution to dissolve the region's parliament in an effort to keep Catalonia under the Spanish rule. CNBC's Sri Jagaraja reports on the same.
A lot has happened in the last 48 hours. There are a number of different moving parts here, all of them interrelated. The first thing to say is that Barcelona has made a unilateral declaration of independence. Madrid's response is to impose direct rule. So, number one, are the Catalan leadership going to go quietly is the big issue here. And I want to bring in Spain's foreign minister on whether he believes Carles Puigdemont has legitimacy.
I don't think that the civil servants in Catalonia will recognize his authority. And we hope that we are going to restore the correct legal situation. We are going to implement Catalan law.
So enforcing direct rule on the ground in Catalonia is, I think, going to be fraught with problems for Madrid. And Madrid has called regional elections on December the 31st to December the 21st, pardon me, to act as a kind of a circuit breaker. And the initial polls do show that the anti-independence parties do have the edge, but just by a slight margin. We've also seen those pro-unity rallies as well in Barcelona and elsewhere. We can show you some pictures of that too. There's not a great deal of clarity at this stage on which side has the clear mandate and has support. Markets don't like uncertainty, and I think this is going to continue to be a problem in the run-up to the December the 21st elections. In the here and now, we've got to ask ourselves the question how this risk potentially that's building in Europe is going to affect global markets.
Okay, let's shift focus then to the currency space. The dollar then now hovers near the 3-month high, while the euro is on the back foot after the European Central Bank's dovish comments and the unrest in Spain's Catalonia led it to post its worst week this year.
And the world of commodities and oil prices edged up closer on 2% on Friday when Saudi Arabia and Russia announced that they supported extending an OPEC-led agreement to cut production. Currently as well, Brent crude prices holding above that $60.5.
And from the precious metal space, gold rises on safe haven appeal after Catalonia declares independence. A softer dollar also boosts gold prices.
Okay, then time to slip into a short break. When you come back, we'll tell you all the cues and news that are stacked up for us when we open up for trade in the next couple of hours. Don't go anywhere.
Well, back home on the Lal Street, it was a day of consolidation on Friday. Nifty ended flat with a tad bit of negative bias, but this Sensex ended at record highs and gained over 2% for the week. But how does the trade setup look for today? Nigel, what are the key things that are, focusing on?
Well, global cues are positive, Anisha, as we said in the first segment itself. But we started off the November series. Well, we had a splendid October series. When you hit more than 500 points in a single series, things look quite good. We started the November series on the back foot. The Nifty Bank, that was a big underperformer on Friday's trading session. In fact, it was down close to around 180 points by the time we wound up. But let's pull up a contribution chart. If you just, remove Reliance Industries and if you remove Yes Bank, without them, in fact, the Nifty would have ended well in the green. So, that's a point that you need to know, that we were down 21 points, but both those two, they dragged us by close to around 26 points. Without them, we would have ended in the green with a gain of around 5 to around 6 points. Even the Nifty Bank, well, it was down 180 points. Close to around 100 points of that fall came in only because of Yes Bank. So, just keep that in mind. Yes Bank was really the sore point in Friday's trading session. First day of the series, I always keep an eye out on the volumes. If you just take a look at the volumes, they were relatively higher even on the cash market. Remember, we have earnings season as well. So the cash market volumes as well were high. The total volumes close to around 4 lakh crores. That's on the higher side. Normally, we see something around 2.5 lakh on the first day of a series. By the end of the day, well, the institution participation was quite high. So the FIs, they sold, the DIs bought, but the net institution sell number was more than 600 crores because the FIs sold 640 crores and in fact the DIs, they bought in only around 55 crores. ICICI Bank, that's going to be the stock in focus in today's trade as well. Remember, we were watching on whether or not there's going to be any divergence. Well, there was no divergence that was reported, but that will continue to be an overhang. Importantly, the positive being that they reported the low slippages in the past 8 quarters. Brokerages, on the whole, they're positive. But remember, the last 1 week, the stock has already rallied close to around 10%. So just keep that in mind. That one's going to swing the bank nifty in today's trade. ITC as well, that's the other stock I'll be looking at because the volume number, the street was debating what's going to go on over there. Well, in fact, we have Macquarie, they came out with the note, they're saying that in fact the decline was 7%, larger than expected. So the first tick could be in the red, but what supports them is valuations. You're working with an EPS of around 10 rupees and in fact, it'll be trading at around 27 times its forward. Institution participation was quite high. So the FIs, they sold, the DIs bought, but the net institution sell number was more than 600 crores because the FIs sold 640 crores and in fact the DIs, they bought in only around 55 crores. ICICI Bank, that's going to be the stock in focus in today's trade as well. Remember, we were watching on whether or not there's going to be any divergence. Well, there was no divergence that was reported, but that will continue to be an overhang. Importantly, the positive being that they reported the low slippages in the past 8 quarters. Brokerages, on the whole, they're positive. But remember, the last 1 week, the stock has already rallied close to around 10%. So just keep that in mind. That one's going to swing the bank nifty in today's trade. ITC as well, that's the other stock I'll be looking at because the volume number, the street was debating what's going to go on over there. Well, in fact, we have Macquarie, they came out with the note, they're saying that in fact the decline was 7%, larger than expected. So the first tick could be in the red, but what supports them is valuations. You're working with an EPS of around 10 rupees and in fact, it'll be trading at around 27 times its forward earnings. So that's what gives some support. In terms of the futures and options segment, the live indicator you have is really the premium. That expanded to around 35 from around 17 in the previous trading session, indicating there were more longs and shorts that were added. And the FI data, well, they were very, very active in the index options, and that was clearly depicted. They bought more amount, of calls than puts. That's really the sense. They bought 1,155 crores. But let's break that up for you. They bought close to around 2 calls for every 1 put that they bought, and they wrote more amount of puts than calls. So clearly the FIs in the F&O market, That's looking very, very positive. Wide range we have for the series. The highest open interest on the put side at around the 10,000 put. So, that's very, very deep. On the call side, well, 10,500 call. That should be the next level of resistance that we're seeing. Anisha, things are looking good. The global market cues are very, very positive. The only, the only soap point could be Brent crude prices. That's moved over $60 per barrel. And obviously, if it goes too high, then it's not good. Both operating margins as well could get hit for a lot of companies. And in fact, in addition to that, the deficit numbers as well could take a bit of a knock. So just keep an eye out on that one. Remember, Brent crude prices have seen a good rally from the recent lows as well.
Well, yes, so crude remains the only niggling worry. Other than that, of course, you've talked about ITC and ICICI, which will see the earnings reaction. But what are the key earnings lined up for today and the other stocks that will be in focus?
Well, we have a lot of them. HDFC, that's close to around 7% on the index. So we should get some of those companies that will be coming out with set of numbers. These are nifty results that we expected today. 3 of them up for you on the screen. Even we have the likes of UPL. They as well come out with a set of numbers. So in total, close to around 10% of the Nifty's numbers. So we'll be reporting numbers. Tata Steel, going to be interesting. Stock has seen a good rally. So we'll keep an eye out on those set of numbers as well. From the broader markets, well, we have a whole host of mid-cap stocks. Wokat, we'll be looking at those numbers. What's the commentary that comes in from the management as well. So all those, mid-cap stocks will come out with this set of numbers. In terms of Nifty earnings, I'm going to be looking very, very closely for IOC. In Friday's trading session, that stock, in fact, did take a bit of a knock. Now we have the GRMs. They came in at around $9 per barrel. That's a tad bit better than the 8.5%. So, brokerage notes as well, they're sounding quite positive. We could expect that stock to bounce back today. ONGC's numbers as well looked quite good. The profitability came in higher. The margins as well expanded. So, those numbers look good. Bharat Financial, Abhishek has been telling us all weekend that those numbers looked very, very good. The NII growth was impressive. The loan growth as well was impressive. So, that stock should open up in the green today. Jubilant Life Sciences, well, that's been a stock that's seen a big rally in the last couple of years. The numbers appear a tad bit disappointing. Margins did compress. But what the management is saying, second half of the year is going to be very, very good. So keep an eye out on that one. We have Ramkrishna Forgings as well. There the numbers look very good. Profit versus lot. Adani Transmissions, no great fireworks there, so keep an eye out for that stock. Bulgaria Industries, numbers looked a tad bit subdued, so that stock could open up in the red. And AU Small Finance, well, a rather mixed set of numbers. There was some worsening in terms of asset quality, but in fact, the loan book growth of around 35%, that was quite good. Let's wind this down then in terms of some bad, weak earnings reactions. All those stocks up for you on the screen. Those numbers looked a tad bit weaker than what the street was working with. We should get DIC India as well. Those numbers look quite weak. And good numbers. IFB Agro, those numbers look good. Linde's numbers as well look quite good. We had Munjal Shova. Those numbers look more or less steady. And Tata Metallics as well. Those numbers as well looked more or less steady. So that's about trade setup.
Well, thank you, Nigel, for that. A lot of stocks really to focus on given the earnings reaction. But time now for a quick break. Up next, the group of ministers on GST recommend a single rate of 1% for the composition scheme. Details on that when we return. Stay tuned.
Third meeting of the GSTN and the group of ministers on GST took place on Saturday to address any IT-related issues. Rukmini Rao joins us with a quick summary of all the key takeaways. Rukmini.
Morning, Nigel. In fact, the third meeting of the group of ministers looking into IT-related issues of the GST Council met and really have given a set of instructions to Infosys. What the minister went on to say was, there has been completion of 66% of work that was told to be done by Infosys. In fact, there have been fresh mandates that will be given to Infosys, issues that Infosys will have to be looking into. Also, the GOM has asked Infosys to increase the number of people on this project to help resolve various issues and also make the entire portal user-friendly and also give an option for traders to exit out of the GST network, essentially. Addressing the media, in fact, Sushil Kumar Modi went on to give us a lot of details listening.
Till now, only 12,000 people have filed their R2, GST R2. 12 lakh. 12 lakh. There is still a gap about 10 lakh eligible dealers who have not filed their returns. About 8,698 crore of compensation has been paid by the central government to the states. GST Council, yes. It will be better to use the word GST Council. 8,698 crore, which does not include Rajasthan and Arunachal Pradesh.
Okay, sticking with GST then, CNBC TV18 also learns from sources that the group of ministers on GST recommend a single rate of 1% for composition scheme. Now, manufacturing is to be cut down from 2% to 1% and for restaurants to be cut down from 5% to 1%. Now, sources also tell us that the group of ministers have recommended a 12% rate for all standalone restaurants, irrespective whether they are AC or non-AC, with the input tax credit. Well, time now for a quick break. Up next, we will focus on earnings reported by ICICI Bank and ONGC Bank. Key highlights on that when we return. Stay tuned. Well, let's take a look at the Asian screens then. When we started early, we saw a lot of green on the screen, but right now we see the Shanghai market has opened down about 0.1%. The Hang Seng is up around 0.3%, but the Nikkei as well, just flat as we speak. Other than that, we had the Kospi as well that was hovering around 40 points higher when we started. That one is actually 0.25% higher. Taiwan as well 0.8% higher. And if you look at the SGX Nifty, that was indicating a 30-point uptick when we started. Let's see what it's doing right now. Well, yes, it is showing a 30 points uptick in right now as well. But let's move on and talk about Rico India then. That will be in focus on the news that the parent Rico Global, which holds around 73.6% stake in the Indian company, will cut off financial support in the future. Varinder is here with all the details. Good morning, Varinder. What does it mean and how do you see this whole thing playing out?
Well, it's a sad day for some of the Rico India shareholders, clearly. And, first things first, the stock is not being traded. It's a suspended stock. It trades on first Mondays of every month. So you will see down circuits, of course. It has been falling from a level of nearly 900 to nearly 200. So, the pain has been taken. And we all know there was a financial fraud which happened. There was an investigation which was there. The auditors came out with the entire big report. There was nearly 1,100 crores of loss which was there in the last year. Now what Rico Global is saying, they have done reassessment again. And, honestly, what they are saying is that we are finding that the losses will continue for Rico India. And, as a measure of prudence for the global entity so that the losses don't go into the global numbers, they are cutting off any financial support to Rico India. This was the biggest thing everyone was watching out for, because if you're an MNC and if you're invested in an MNC, everyone thought that at some point of time, the global company who holds nearly 75% stake in a company, knowingly that there was a financial fraud which was there, will support it. Now, it will not happen. It will not happen. Of course, now what are the big questions? The creditors, the banks who have given loan to them, they will get, money back, from Rico Global, which is there. But the bigger question here is that, is this a precedence, in terms of any company doing, getting into fraud for some reasons? And honestly, we still don't know what has happened because they're not going into the past in terms of telling us that this was the reason where that 2,500 crores, went in. So we don't know what has happened to that money. How did the entire thing, happen in the past? They are just saying that this is what we're doing now and no financial support in the future. So, at a stage when all this, fraud happens, the creditors get the money, but there is nothing in terms of the, minority shareholders. Why? Because, you remember, at least 1 year, the stock has been into this, trading ban. There is no exit at all, even if you want to exit into the stock. So you are, just logged into it. And now there is nothing which will happen, whether it's SEBI or NCLT who will come ahead in terms of, support of minority shareholders. No one knows whether the global entity is, is ready to give any support to the minority shareholders or even answer what happens to it, for all the embezzlement happening in the past. No one knows. So, whether, in the future, any company could say, what CP does.
Absolutely. All right, Varinder. Sorry, state of affairs there for all those shareholders of Rico India. But let's get on to happier things. Let's talk about earnings. ONGC's numbers look quite good.
Nigel, ONGC honestly is not an entity or a company, which move a lot of numbers. The numbers were okay. Numbers were not bad, not great, but they were okay set of numbers. Margins coming in at 48%. EBITDA was up 4% because there was employee cost coming down by nearly 13%. Profit was up 32% because there was other income component of nearly 1932 crores. All these things put together, the numbers were okay. But also, please remember, there are two things which are supporting ONGC right now. One is the valuations. It is one of the dead stocks in the PSU which hasn't done done at all anything in the last 3-4 years, and you've seen how the PSU stocks have been moving up. So there are a lot of people who are giving buy calls on ONGC at the moment, thinking that this is the bottom for ONGC. And second and most important, crude oil. It is a 2-year high. It's 260. Okay, it passed 60. Yeah. That's a good news for ONGC. So even if ONGC moves, people will be thinking that okay, very good numbers or good numbers have come for ONGC. Crude. The backdrop is crude. Yeah. And don't forget that crude is moving up, hence ONGC is moving up. I see green on ONGC today.
Okay, and what about IOC? That one was down about 5% that day. First cut of numbers didn't look that good. Now we have the GRMs and the brokerages. How do you see the reaction on that today?
See, the numbers were bad. IOC, no point taking away that the numbers were not, as what we were expecting or the brokerage was expecting, and still people are, figuring out the mystery of missing, the margins, happening in, because if the Singapore refining margins are moving up 30% quarter on quarter, you are expecting that will happen for any OMC, but that didn't happen for IOC, and that is what everyone is thinking, why it didn't happen. But if you look at closely the numbers and the statements coming from the management, the GRMs came at $9.14 per barrel, which is including inventory gains, where the polo was nearly $8.5 to $9 per barrel. So the GRMs came at point what we were expecting, in line with expectations. The petchem EBITDA was low. The marketing margins fell quarter on quarter. If you just see, the petchem sales were down 26% quarter on quarter, and no one expected that. The marketing inventory gains was only $0.03 per barrel, while the street was expecting it could be anywhere between $1.5 or $2 per barrel. I mentioned that day also it could be 4,000 crores, 5,000 crores, but it was only $0.03 per barrel, which was the lowest what we have seen in terms of this. But again, brokerages are saying, okay, buy in weakness. They are saying that, this was one of the quarters, there was a lot of one-offs which happened. IOC, Bank of America Merrill Lynch, they have raised their target price to 442 from 428. Deutsche Bank is saying there will be strong third quarter, which will be coming in there. They have a target price of 530. Nomura is saying accumulate on weakness, and they have a target price of 500 rupees. So I see that there will be some buying happening in IOC, but I'll be more interested in watching numbers coming from BPCL, HPCL, and the smaller refineries as well, Chennai, MRPL. How does they behave? Because the marketing margin miss is something which no one expected in this quarter. All right, Faranda, thanks so much for that. Well, we'll slip into a short break. Up next, we'll get you expectations from numbers that are expected today. Lupin and Bharti Infratel will be on our radar.
Let's shift focus now to earnings. Lupin would be reporting its numbers today. Ekta is here to tell us what to expect from the numbers. Good morning, Ekta. Tell us more.
Well, morning. Well, for Lupin, it's probably going to be another tough quarter for them. And the street is expecting that, because the management had guided that FY18 is going to be impacted by conditions such as pricing pressure in the US, and hence the entire number for Q2 of FY18 is likely to be impacted. Also remember that there is more pressure on their diabetes portfolio, which is basically Glumetza as well as Fortimed generic, and hence that is also going to weigh separately, because you're seeing additional competition coming in on those drugs, and combine that with more pricing pressure on their entire core US portfolio that they're selling. Now, in terms of what we are expecting, so the revenue is likely to fall around 7% but again, the range is anywhere a decline of 3 to 13%. Margins were a disappointment last quarter. It had come in at around 19 to 20%, but any sort of improvement will be taken with both hands, but it's still expected to be maintained at those levels at around 19 to 20%. Profit is expected to probably come in at around 400 odd crores, simply because of the kind of operational weakness that we're likely to see for Lupin this quarter. Overall, there will be important, focus in terms of commentary, what's happening with the Goa plant, because they were expected to get the establishment inspection report for that particular facility. So whether that is going to come through and by when, that will be keenly watched out for. And obviously, the US pricing pressure will be very important, and that will culminate into what we can expect in terms of margins.
All right, Ekta, thanks so much for that. Well, let's focus on the other big stock. ICICI Bank, it reported its numbers post-market close. Abhishek's with us to take us through the highlights. Hi, Abhishek. Good morning.
Good morning, Nigel. So what ICICI Bank has reported is their slippages, that is the assets that turn into non-performing assets in the current quarter, has been the lowest in last 8 quarters. You look at the graphics that comes up on your screen. They have reported a slippages of close to 4,674 crore, which is the lowest in last 8 quarters. So therefore, the gross NPA actually declined. So the gross NPA based on customer assets is at 7.87% versus 7.99% in the previous quarter. quarter. Loan growth remains healthy on the domestic book front, wherein the domestic loan growth grew by 13% on a YOY basis, led by retail portfolio growing at close to 19% on a YOY basis. The RBI's audit is still underway, so the overhang in terms of divergence remains on the stock. Brokerages, however, have been very positive on the commentary from management and their, potential upside in terms of target price is like across brokerages, they have 345 as the minimum target price. So you have the likes of UBS, Kotak, IDFC who have actually upgraded their target price, while brokerages across have maintained an outperformer buy recommendation on the stock. Back to you.
Okay, Abhishek, so ICICI Bank low slippages and good loan growth probably in green today. But what about HDFC? What are the expectations from that one?
Well, the expectation from HDFC is that the loan growth above 15% will be very positive. While in the previous quarter, the loan growth was a 17.8%. This quarter, we need to see how the pressure from PSU banks will be taken care. Apart from that, net interest margin above 3.75 to 3.85 will be very positive. Remember that NBFCs have been a beneficiary in terms of cost of funds reducing by more than 100 basis points on a YOY basis. Gross NPS saw a slight hiccup in the previous quarter. It rose to 1.12%. So anything below 1.2% will be very positive. Our polls suggest an NII growth of close to 15%, while net profit to grow more than 7.5%. Back to you.
Okay, all right. With the expectations that we'll be getting from companies that will be reporting their numbers today, Bharti Infratel, that's the other big one on our radar. Ronit joins in early this morning to tell us what to expect from there. Hi, Ronit. Good morning.
Hi, Nigel. Good morning. So I'm going to start with the numbers first. Revenue is expected to be up around 4% at 3654 crores, as well as the operating profit expected a slight uptick around 13% at 1,600 crores, and margins around 44%. Now moving on to the PAT, up 7%. Now the key things to watch will be first is the margins and revenues will remain stable, largely due to tenancy additions by Reliance Jio. But Bharti Infratel could be at risk largely of losing some small businesses from the small players such as Tata Tele as well as Reliance Communication. Now moving on to the tower additions, expect around 4.4 thousand and around 306. Moving on to the net tenancy additions, they are expected to decelerate. The growth is expected to decelerate largely because of Reliance Jio. And finally, the key thing to watch will be any announcement regarding their deal with KKR, because the stock was down around 5% on Friday. Back to you.
Okay, all right, Ronit, thanks so much for that. Well, Tata Steel, that's going to be the other big one on our radar. Remember, the last 1 year, the stock is close to have doubled. It's up 98% from the demonetization lows as well. Let's run you through the expectations and consolidated revenues that are expected. That should come in high by around 18%. Margins expected to come in at around 16%. And they should report a net profit. That's, if they don't consider any kind of exceptional. But watch out for an exceptional, because it could turn out to be that they report a net loss owing to the charge of around £550 million. That was owing to the British Steel pension scheme. That was resolved in the past quarter. So otherwise, we're expecting a net profit. But otherwise, you could keep an eye out for some exceptionals over there. That's really where all the unimportant numbers end. Because for Tata Steel, you're looking at the geographic performance. You're looking at what's the EBITDA per ton from various segments. Top line growth, why is that? Because we've already got the provisional sales volumes numbers. That's coming high by around 15%. So that explains the bulk of the top line growth. In terms of the India business, then the sales volumes, we already have the provisional numbers. That's coming higher by around 19% approximately, coming at around 3.3 million tons. So let's get the India business up for you in terms of expectations. Why do we have higher volumes coming for the Indian operations? Because the Kalinganagar unit, or their capacity utilization levels have been coming in higher. So that's what drives the volumes of there. The EBITDA per ton, that's expected at around 12,500 crores, or 12,500 rupees per ton. Now, that will be an increase of more than 60% on a year-on-year basis. Even on a sequential basis, it should increase by around 15%. The EBITDA per ton increases because of operating leverage, higher volumes coming in out of Kalinganagar. Remember, realizations as well have been higher. Ferrochrome prices have spiked up as well. And Tata Steel has been focusing on value-added products. So that's what helps them as well. In terms of coking coal, Tata Steel gets close to around 30 to around 40% of its total requirement. That's coming in from captive sources. So they're protected over there. European operations, that's not integrated. Or their volumes, we already have the provisional number by around 15%. The EBITDA per ton increases because of operating leverage, higher volumes coming in out of Kalinganagar. Remember, realizations as well have been higher. Ferrochrome prices have spiked up as well. And Tata Steel has been focusing on value-added products. So that's what helps them as well. In terms of coking coal, Tata Steel gets close to around 30 to around 40% of its total requirement. That's coming in from captive sources, so they're protected over there. European operations, that's not integrated. Over there, volumes, we already have the provisional numbers. That's coming high by around 15%. But the EBITDA per ton that we're working with should be at around $70, $73 per ton. That'll be an improvement on a year-on-year basis. On a sequential basis, it could be a bit of a downtick. They're not integrated. Higher coking coal prices, higher steel prices, higher iron ore prices will hurt them. And also the spreads have contracted. So that's what hurts them. Southeast Asia, small part of their business. Volumes numbers we already have at around 670,000 approximately. EBITDA per ton, $15 to around $20 per ton.
Okay, Nigel, thank you. We'll watch out for all of that. Hopefully, it's not a long day for you and the numbers come in early in the afternoon. But moving on from the broader markets, we have Marico that will be reporting number. And Manglam now joins us to tell us what to expect. Good morning, Manglam.
Good morning, Anisha. So good set expected for Marico, primarily because remember the last quarter, they had the GST destocking problem. The volumes declined by 9%. So as a result of that, we're expecting some sort of restocking. We're working with a volume growth of 7 to 8%. Some on the street also expect a 10% volume growth. The stock has been range bound over the last few months, at least the last 6 months, in a 300 to 330 rupees range. That's because the valuations for Marico absolutely in line with street. So a positive surprise would be positive. We're working with a 10% revenue growth, most of that led by volumes. EBITDA is likely to grow a tad bit lower by 4%. That's primarily because raw material prices, copra, which has increased. Net profit is likely to grow by about 4.5–5%. Again, volume growth most important because remember the last quarter volumes declined by 9% and the management said that they are likely to grow in double digits in the very near future. The same happened during demonetization as well, where the volumes declined. The management said the immediate target is to bring it back up to 10%, and that's what happened in the quarter thereafter. We'll keep an eye out on all those things. Margins will also be important given the spike that we've seen in copra prices.
Okay, thank you, Manglam, for that. But let's now shift focus onto the commodities world. Manisha Gupta joins us to get us a wrap of what's happening in the world of commodity. Good morning, Manisha. Crude really on top of mind, above the $60 per barrel mark?
Well, absolutely, and it's been quite some time since we saw those levels come back into the market. So it is a good 27-month highs that you are looking at in the case of the crude oil prices. And $60 has been broken on the higher side, so it is looking bullish on the charts as well. Well, it really has been the OPEC and the allies reiterating that they will continue to work towards balancing the market. There are supply concerns, geopolitical tensions as well. The global inventories have been declining, so all of that really has been supportive. And add to that the robust demand that we've seen come in from Asia, that really has been on the higher side. And it's not just Asia running the market, because when you look at the strong economic data that's coming from Europe and Japan as well, that tells you that as much electric vehicle conversation that the markets may be doing, the crude oil demand, the kind of numbers that we are seeing from all of these consuming countries have been on the higher side. And remember, we have been talking about on how a spike in crude oil is expected. You've already seen that coming. Markets are anticipating that another $2 to $3 higher from here is where you will see this year ending as well. A quick word on the metal space, and that one also has been quite supportive. You have the aluminum prices now up 30% in this year. Alumina prices have gained 56% in last 3 or 4 months as well. So some of these metals actually have done quite well, including aluminum, copper, nickel, where you are seeing deficit concerns. And Shanghai has opened this week positive for metals as well.
Okay, all right, Manisha, thanks so much for that. But let's come back to the Indian stock markets there. In the derivative action, the big Q really was the premium expanded on the Nifty futures. We had the FIs are quite positive. They were buying more calls than puts and writing as well. Puts. Manglam's with us. Manglam, run us through how you're reading this.
Absolutely. Look at it from a positive perspective, especially in the index options space. But the one thing that resumed was the selling in cash market. The first day of the new series, FI sold about 640 crores in the cash market, sold about 66 crores in index futures as well, but there's nothing really to complain there given the fact that they're already 70% long in index futures. The big number, again, 1155 crore worth purchase in index options, and that is because they bought nearly 2 long calls per put and they added nearly 3 short puts per short call. So that is a positive. They're waiting for an upside and believe there is support on the downside. The Nifty put call ratio around that 1.4 mark, no real problems out there. The November series puts, just take a look at the 10,300 put. That one saw some writing for a premium of 113 rupees. 10,400 call, that was fairly active as well, premium of 111 rupees. The 10,300 put and the 10,400 call have a cumulative premium of close to 222 rupees. Some writing on the 10,700 call, but keep an eye out on 2 stocks. Indiabulls Real Estate was in F&O ban on the first day of the series itself, and giving it company now today is JSW Energy. So both those stocks will be in focus.